while preparing financial statements, we have to always understand, is the going concern assumption applicable or no? Can you tell me what is meant by going concern?
Operations of the company are going to continue for a foreseeable future.
Okay, so that means the company, it doesn't look like they intend to liquidate the business, right?
Yeah.
Okay, so why is going concern an important aspect of financial reporting?
Whether the company is able to pay, whether the company is generating too much profit, so he can pay his debts in future. Just like the real example is Vodafone, which he's unable to pay his debts on time, defaults. So the auditor highlighted it may be the company may not be able to run his operations.
Okay, so when you cannot run your operations, then what happens?
Then you cannot pay your salaries, your pay debts, all the things. The company is not able to generate that level of profits.
Okay.
So the company go insolvency. So it highlights the going concern is in risk.
Okay. So how does it impact our financial reporting?
It impacts just like that. Debt ratio will be higher level. Current liability should be higher. Just Vodafone, if I say case that like that, they have too much cash. Do not have cash inflow too much to pay that debts. A negative cash inflow like that in the cash inflow.
Also, it may impact the decision making of stakeholders to invest or to like that.
Again, you didn't get my question. I asked you, how does it affect financial reporting? Now, suppose you are a going concern. How do you record your non-current assets? Do we record it at cost less accumulated depreciation? Or do we record it at net realizable value?
Then it will be impairment will be there.
Costless depreciation.
We would not be able to perform accrued or prepaid expenses, basically.
No, I'm asking you a straightforward question. You have a non-current asset. I'm reporting at cost minus accumulated depreciation. My going concern status is affected. Will I continue to show the asset at cost minus accumulated depreciation, or will I record it differently?
We will record it differently.
So when I'm asking you what is the impact on financial reporting, it means that we will report the facts on liquidity basis.
Yeah.
That means you will report items at the net realizable value because you're not going to recover the cost over a period of time. The cost is going to be recovered in the current year only. When we have depreciation, what is the assumption we are making? We are going to use this asset for next few years and we are going to get a benefit from it. So I'm charging depreciation based on my usage of the asset. Right or no?
Yeah. That's
so
correct.
when I'm asking you the impact of going concern on financial reporting, the basis of reporting will change. So financial statements are normally prepared on the assumption that the entity is a going concern and will continue to operate in the foreseeable future. So normally when I say foreseeable future, that means it will operate in the next 12 months. Hence it is assumed entity has neither the intention nor the need to curtail materially the scale of its operations. If such an intention or need exists, the financial statements may have to be reported on a different basis. So if your intention is to liquidate in the next 12 months, it will happen, then you need to report it on a different basis, which is called as a liquidity basis, and that basis has to be disclosed. Got it?
Yeah.
So if you had a normal SOFP, you would report your non-current asset as cost minus accumulated depreciation. Intangible assets will be reported in this manner. But how would we report it in our going concern liquidity basis, first of all, this asset is non-current. It has become current. So I would take it under current assets. And I would usually report it at cost less accumulated depreciation. But when you plan to sell it, then you will have to record it at the asset available for sale and recognize the net recoverable value. Also, you should classify it as held for sale. Now, there is an accounting standard called as non-current asset held for sale. It says that if you have any assets which are held not for use in the business, but for sale, principally for sale and not for continuing use, then if certain conditions are fulfilled, we classify them in a category called as held for sale, which is an item of the property, which is an item of the current assets, and it should be reported at the lower of carrying value and net realizable value. Now here I'm not getting into the details because this accounting standard will be discussed later on in the syllabus. So for now, I'm just giving you an idea of the implication of going concern on our method of reporting. Okay. Same way, if you have investments which are recorded under IFRS 9, long-term investments, now you report this investment will be classified as current assets because you'll be selling it in the next 12 months. Same way, intangible assets also get classified under held for sale. Your inventory will have to be recorded at net realizable value, which may turn out to be lower than cost. Okay, normally it's always lower of cost and net realizable value, but when you have a liquidation coming up, it may happen that the value of your inventory has fallen, so you would have to record it at lower than the cost. Your accounts receivable, okay, you could be having a high credit loss or you can have impaired receivables as compared to normal. Your retained earnings, you may be lower. It will be lower as compared to the normal basis because you took various expenses like impairment, etc. And your borrowings would be classified as current. Sorry, not non-current. You will classify them as current assets because current liabilities because you have to pay them off. Okay. Same way, accounts payable may be higher than the unpaid borrowing. Okay, because you have a high unpaid borrowing, you may have a higher. So you can see that the entire basis of accounting changes if the liquidity basis is affected. So going concern is a very important aspect of financial reporting. Any doubts on this? Now we go further into, so when we do a liquidity basis of accounting, what do we do is previously unrecognized assets may need to be recognized, for example, internally generated brands. So sometimes you have internally generated brands, we cannot recognize it because they are internally generated. But if going concern is affected, then you will, if you can measure it reliably, you will record it in the books. Also, you will accrue for expected disposal costs of assets that will be liquidated. So when I'm classifying a non-current asset as held for sale, I will take into account the cost to sell. Again, when we come to the standard of IFRS 5, we'll get into more details, but we do capitalize the disposal cost. And we accrue those expenses and incomes which will be earned or incurred through the expected liquidation method. For example, expense item is wage and salary costs, which will be incurred because of this situation. So you will have to make more provisions. You will have to record your receivables at lower value. You will have to record your assets at lower value because you have to consider what is the value you will get from the sale of those assets. Okay, so this is the concept of going concern. Any doubts?